Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, August 1st, 2018. In this video, we'll take a look at commodities via several commodity tracking ETNs. Won't go through the futures charts because I want to get through this quick, trying to cover. This is not an all-inclusive commodity review, just some of the ETNs. And again, if you do trade futures, which usually are a better way to go. Well, actually, I shouldn't say usually. With some of these ETNs, it's a better way to go. Just drop me a line in the trading room, and I'll be glad to put up a post of a chart of any of the commodity futures. This first one here, I'm just going in alphabetical order on my watch list. Some of these commodity ETNs were recently um, abandoned, if you will, by the companies, and they moved over to the over-the-counter markets, and they were replaced again. Some of these with different ticker symbols. So I still have some of the old ones in my watch list. I'm looking at BALTF. This used to be the old symbol BAL for many years. You can see all the trading history, and when I zoom in here, and you can see these candles, how very thin they are. Volumes dropped off. This one's moved over to the over-the-counter market, and so therefore looks like liquidity is drying up. Probably best to stay away from that one. So I'm going to move on. I just wanted to cover it since I have covered it in the past, and if you want to trade cotton, better to just go with the futures unless there's another one out there I'm not aware of. Cane is one of a couple, at least two sugar ETNs that I know of, and sugar looks good. Sugar actually looks better than a lot of the other ones out there right now. I have a lot of lines on this chart, but really what we need to focus on here is this downtrend line. It's not super well defined, but it's certainly one to watch. And more importantly, we have a divergent low. Now you can see that PPO is starting to roll back down again. And so, as I often say, divergences are not a buy signal, merely an indication that a trend reversal is likely. Now we can continue to wedge down as long as these divergences are in place. It looks good. And let's take a look at one other thing. Oh, before I leave this chart, you can see my targets right here. The levels that are marked on this chart, I don't always update all these charts for video, but I have looked at this one, and these would be my targets right now: 738, 812, 880. Those are the actual resistance levels. They're not adjusted for an optimal fill. What I mean by that is if I'm targeting this final target here at 880, I would set my sell limit order a little bit below that, maybe 870, 872, somewhere in there. Because if a lot of eyes are looking at a level, it's not unusual to see the cane or whatever you're trading reverse just shy of the actual resistance level. And to add to that, I'll also look at the charts closely at the time of the futures, because, for example, if it looked like cane was ripping on up here, heading towards 880, but all of a sudden the futures ran into resistance, well, that is what we're looking at. That's what you're trying to trade. These ETNs will invest in the futures. They try to do a good job, but they have additional expenses, and at time they can have some tracking error, some little difference there. So given the two, I would certainly close that trade well shy, maybe all the way down here at 860 if the futures told me that they were at or near resistance or some other type of potential sell signal or reason to get out of there. And on sugar, I did want to look at the futures. This is a longer term chart. This is a weekly chart of the sugar continuous contract, which is just really they're splicing all the futures contracts together when they do that. So you have a longer term view, and you can see here a couple things stand out. And this is a weekly chart. I'm going to scroll through here because this chart I can't size to fit the screen easy. This is on stock charts. It's old clunky antiquated trading platform or charting platform, but they still have some nice charts. I stick with them for keep a membership there or a subscription. But what are we looking at here? Sugar. A couple things that stand out to me on this chart. Number one, we have these reactions back here, about early to mid 2015. Couple reactions all the way back 2008, 2009 from above, reactions from below. So therefore, that's a level to watch. Sugar's not going to go to zero, and that's one thing about any commodity. Unlike a stock that can go bankrupt, you're really not going to see that. I mean, sugar market crashed back here. Prices were super low, but in over the past decade plus, you can see that this has been about the low end of the range, around 10 cents. We're at about 11 cents right now. Um, And add to that, we have a what looks like a, potential divergence here on the weekly chart of sugar prices. So there's your what looks like a bullish falling wedge. Now these indicators are still pointing lower. The PPO is a momentum indicator. The RSI is pointed lower, but there's a potential if we can reverse here off support, we'll have confirmed some pretty strong divergences. The last time we had bullish divergence was right back here. You can see these divergences here, here, and we had this huge pop. So the thing about sugar and a lot of these commodities, when they're hot, they're really hot. They can really run. Just go back in time, look at some of these rips and measure that. I use log scaling. That's why you see 12, 14, 16. You see the price compress. So it may not look like a lot on this chart, but these are really big moves. In fact, down here from 12 up to 36, well, that's a triple in price, 300%. And you can see that it did it many times, moves like that. So that's all I wanted to point out. Keep this one on your radar. A lot of these commodities I've been, thinking that we were going to see a big year in 2018. And we still may, but so far it's been a failure to launch. Now we've been able to trade these long and short over the years, but I just want to point out this one's setting up. We don't have any buy signals yet, but it's looking good so far. I may have, yeah, I'm sorry. As I realized, guys, as I scroll up and down, you probably couldn't see all the chart there. So let me just do this one more time. I'm talking about these rips. Here's that rip. There's a move from 12 to 36 right there. And you can see many comparable moves. And likewise, these suckers, they tend to fall very fast too. But they're good trading vehicles, but you got to get in them at the right time, and that's what I'm looking for now. So we're at support. As I scroll down, you can see the bullish divergences down below. Again, I may have cut this chart off as I'm doing the video. I see the entire thing, but then I'm scrolling it up and down within these little square corner bars that tell me which part of my screen I'm recording. And real quick, here's the daily chart of sugar futures right here. I'll scroll up a little bit. You can note before I leave the top here, this is the RSI up top. So you can see the divergence lines that I have drawn. I'm going to move that up here so we can encompass price and the MACD down on the bottom. Sometimes I'll use a PPO. Probably should put it up on this one because we have some big price swings. But a PPO and a MACD will usually paint a very similar picture. They're close cousins as far as momentum indicators go. And you can see it. Nice bullish divergence right there as we head into these lows. And it's not just an arbitrary random low. We're coming up on that previous low from back in 2015, right around there. So as I said, sugar has good support around the 10 cents, 10 cent level, or at least has for the past decade or more. Technicals work well in these commodities. Here was a nice head and shoulders topping pattern that played out and then some. This was a measured target right here. Would have been probably added back at the time. And you can see all these wedges, falling wedges with divergences. And again, it may not look like much, but you measure it out or just pull out your calculator and do the math on a move from about 16 cents all the way up here to about 20, 21 cents. It's a good move. So even trading these counter trend rallies in an overall bear market has been very profitable. You just got to get in and get out. Don't get married to it. Of course, if you can capture a bigger trend, all the better. And so right now I'm looking for both. I'm looking for reversal here, but being that you're looking at sugar at multi-decade lows, the low end of its range, even getting in a little bit early with a stop somewhat below 10, maybe on a weekly closing basis, you have a pretty attractive risk reward. Now, you don't get paid to wait in commodities. That's the one thing about them. They don't kick off a dividend, unlike, bonds or certain high yielding stocks. So you don't want to get in too early. So we're going to watch this one. And again, going back to that chart of what was it we were looking at here? Cane, and I'll get to the other option there, SSG something FF, I think. But there's Cane. So look for a break of that downtrend line. Again, there are your price targets right there. Or any type of buy signal, maybe a big green bullish engulfing candle or something along those lines. Let's continue on. Corn. Corn had this divergent high right here. And again, it's a wash, rinse, repeat thing. Like I said, these commodities tend to trade pretty well to the technicals. You can see bullish divergences. This looks like we must add an official trade idea back here. T1 was hit. We must have went long around this divergent low back here. So divergent low, target hit, continue to fall. It's a lot of ag commodities have been in a downtrend, and then back here at this point right here, you had a divergent low. Looks like another target was hit, and we went on up, and you can see this was a former support level back here. It was support for quite a while all along here, and that was a natural target. Support once broken becomes resistance. I don't believe that I had that as a price target on there, but you can see that's where corn reversed. And then most recently was pointed out, we had this, using the wrong tool here, click align tool, and show you we had a nice uptrend line with a divergent high. So you had negative divergence into support, and that's what you look for a short entry or to get out of a long if you're in a long trade and you've been trying to trend trade and want to milk the run as much as possible. Then that's where you should have gotten out, or at least had a stop above at the very least, and then boom, like I said, when these things move, they can move very fast. That's the nature of some of these commodities. And that one dropped. I believe I mentioned it just recently back here when we were getting a bullish PPO crossover and oversold. I mentioned it as a bounce trade in one of the recent, maybe even the previous video. So far, we rallied right up to this resistance line here and had a little bit of a pullback. So I can't make a case right now to jump in long, nor to short it. Right now, I think that that bounce trade I made mentioned, most of the milk has been, um, the easy money has been milked off that trade for the time being. So maybe this one needs to consolidate for a little bit here. And if we see anything, or I see anything in the charts, I'll let you know. But let's just move on right now. COWTF. This is a livestock ETN. You can see a little trend line here. Mm, yeah, there's divergence. I could draw it out there on the other side. We broke down and we back tested, and we've rolled back over. So we're below that trend. There was also this yellow line as a pretty significant level. It's acted as support and resistance in the past, and we're below there. So the near-term outlook is bearish until and unless Cal could take that out. I wouldn't short it here. If you wanted to, maybe come back down to this reaction low, but that's not a chart I care about. I'd rather let that one firm up a little bit. Cut, I've been bearish for a while on the timber ETFs. There's two of those. Cut is Invesco Timber ETF, and then there's WOOD, which we'll get to later on because I'm going through these alphabetically. And there it is. You had an uptrend line, a price channel. It actually goes back for quite a ways. You can see there was your primary uptrend line, and we broke down. We back tested for a while, but we've clearly rolled over. So I think it's safe to say a top is in. Was most likely put in here in timber. So we'll see. And again, I always say this: these, unlike all the other ETNs that I'm covering here, which invest directly into the futures of the underlying commodity, cut and wood do not invest into timber. There's really no such thing as timber futures. They have lumber futures, random length lumber, and all that. And I just want to make mention that these are not tracking lumber futures. They're tracking a portfolio of timber and forestry companies that produce that sell wood, paper products, that kind of stuff, forestry and all that. So there's cut. DBA, that's the agricultural ETF, had a divergent low and there was a trading up, another divergent low, started to run. But so far it's kind of petering out here. So I can see this looks like this momentum indicator is rolling over. I don't know. I don't have a strong opinion on this one. If it can hold this divergent low, if you're in it, watch a break of those recent lows. It might want to run at them again, just extend these divergence lines. I'd like to see this one firm up a little bit more. At that divergent low, I was looking for a bounce up to 1835. And certainly if you're long, and you got it down here somewhere recently, just set a stop, either at break even or maybe a little bit below. And yeah, right now I just don't have a very strong opinion on that one. GAZZF, that's a horrible tracking, one of the worst ETNs, tracks natural gas. Don't even look at the charts. It just does a lousy job of tracking nat gas prices. JJCTF, this is copper. It doesn't look good. I think it's a busy chart, I know that, but these purple lines right here mark these reaction highs. There was a reaction low there. We broke down, back tested, and rolled over. Trend indicator that we're below here. That usually I use the zero line to define bullish and bearish trends, but on copper, and sometimes you'll notice this on a PPO or even an RSI, I'll add a different line. So you had the zero line up here, the dotted line, but I put this purple line here because that has capped or defined all the uptrends. In other words, I use the 9 EMA as which is a signal line to define the trend. And it often, with you can usually it's a zero line, but in this case it's that purple line that comes in a little bit lower, acts as support when tested above. Tells you the trend is bullish, bullish, stay long. Told you to stay long all through here, and then boom, bearish crossover. Not by coincidence, that bearish crossover coincided with a breakdown of that support level, and we've since back tested. So copper's not looking good, in my opinion, at this point in time. Next one up, JJGB. Hasn't had a lot of trading history. This is the grains ETN. I told you iPath flipped a lot of there, and there had to be reasoning behind it, I'm sure, but they delisted or didn't. Yeah, they moved some of the older ones that they had. This is the old JJG, which is a grain ETF, holds or ETN, holds corn, wheat, and soybeans. And see, not a lot of trading history here, so that's what I have to do is splice these charts. Here's the other one, JJGTF. This one looks like it's got a lot of volume. So okay, this was the old JJG then, one of the two. And there it is. You can see we've had a lot of trades on this one. And again, it works out pretty well to the technicals. You can see the previous divergent lows. And in the last update, I mentioned looking at all the grains, including the ETN, as a potential bounce trade because it was oversold and we were getting this bullish crossover. And again, we've gotten a lot of that bounce. Where we go from here, I'm not sure. That's, I think, a pretty good bounce. You could continue to trail stops if you took it since that video, or you own this on your own, took it somewhere else. But the risk reward isn't so hot right now. In fact, I would imagine we're going to get a pullback before we get up here to any of these targets, but we'll see. So maybe just one to watch for to see if it sets up in the coming weeks here, maybe months. JJOFF, this is the other coffee ETN, same story, so I'm not going to go over the long-term charts of coffee. Or was that sugar? Did I do? Yeah, I already did sugar. Yeah, I need to show you the charts of coffee. I believe I only looked at sugar so far. So there it is. You have this divergent low here. You have a downtrend line. We had a little false break the other day. We're back down below it. And this is, again, sort of the theme lately. It's failure to launch in a lot of these commodities. They've been setting up bullish. A lot of them have fallen down to historical low ends of their ranges or support. Let me show you a chart of coffee real quick. Okay, this is a weekly chart. So this goes back all the way back into the late 90s. And what I'm looking at here, there was a collapse in coffee prices back in, early 2000s. But since then, again, since all the way going back to about 2004, 2005, little over $1 level has acted as support. I'm sorry, as support here on coffee. So you can see, quite a few reactions along the way in recent years. There's a little downside to go there, but some potential divergence setting up as well. I could draw it out there on the MACD. Let's see. Oh no, I have to scroll up a little for you here. Nope, that's not going to work. There it goes. So there it is. So a little bit of potential divergence. Potential means these indicators are still pointing lower, the momentum indicators, RSI, but we're close to being oversold. That's something else to look at. We're oversold here. Oh gosh, I keep cutting this chart off. Remember, some of these charts don't fit the screen here for the screen recording. There it is. So we're close to being oversold, but we're not there yet. So again, just one to watch. Next up, JJUFF. I don't have a lot of annotations or much of an opinion on aluminum. I could probably draw a trend line here, show you that it's just above trend right now, so on support. But again, this one trades pretty thinly. I don't think I've ever traded that ETF. I just keep it in my watch list because it's there as a commodity tracking ETN. KOL, this is a coal ETF, and again, this one doesn't hold coal either. It invests in companies that are in the coal industry, even railroads, things like that move. So it's not a completely a direct. It's more of an indirect play on coal prices. I don't have much of an opinion now. You can see the last time I had an opinion here was this divergent low, rallied up, hit resistance, pulled back. So let's say nah, well, don't say anything. Not neutral. Not bullish or bearish. Just neutral on that one. LD lead. That's super thin. Not even going to give you an opinion on that one. This is NIB, which is cocoa. Cocoa prices have actually taken it on the chin recently, but look interesting here. Now, if we can get a reversal. So what I see some pretty strong divergence, potential because again, this one's in free fall. The indicators are at this point, they do have higher lows, but they haven't finalize those. But to finalize that, I need to see a bullish crossover on the PPO and the RSI to turn up. But what I do like about it, okay, we're oversold. See right here, that blue line is the oversold level. That's 30 on the RSI. Last time we were oversold was right here, and we got a big bounce. Last time before that was right here, and we got a huge bounce, big rally, a bull market there. And you can see go down the line, that works. Now, thing is too, in bear markets, this was a bear trend. This could be the early stages of a new bull market in cocoa. In a bear market, oversold tends to stay oversold for an extended period of time and become more oversold. You tend to get those deeply oversold readings. But in a bull market, it's usually one and done. You kiss that level and then boom. And also another characteristic of a bull market is overbought tends to become more overbought. And I'm talking about going well above that red line, which is a 70 level. That's traditionally considered overbought, and stay overbought for an extended period of time. So it's just like a bear market in reverse. When bear markets, oversold readings are fleeting, and usually once you get around to that 70 level, you kiss it and you're done. And that tells you to get out of that bear market rally counter trend bounce. So everything I'm seeing here, gosh, I'm making a big mess of this. Everything I'm seeing since this bottom here is indicative of bull market action. Now we are coming back down. We're coming into that range. I have to say this. I have some mixed thoughts here because I'm not so crazy about the fact this was a pretty strong basing pattern. It was a multi-year basing pattern. We broke out right there and really ran, and we back tested it successfully right here. This shouldn't have happened right now. Really, and at least I should say the ideal scenario if this is a new bull market, we should not have. It's okay to come back and test it a second time, but this was truly a strong new bull market. We should have taken off after that back test, and we didn't. We're back in the range. However, we're still, the definition of an uptrend is a security making a series of higher highs and higher lows. So far, we have higher highs in place here. And yeah, we took out this previous low, and that again calls this uptrend into question. I will say that, but we're still well above these lows from 2017 into early 2018. So there's one to watch. Again, we need to see some evidence of reversal. Otherwise, you're trying to catch a falling knife. And I don't see really solid support till we get down here at about this $23 level and 2140. So before then, we'll need to see some kind of reversal, maybe something on the 60-minute charts, intraday charts, or maybe something on the futures if I take a look at the cocoa futures. So there's one on watch right now for a potential swing trade. Oil, this is one of a couple ETNs, OIL, NF. I'll get to USO in a second. I prefer to trade USO versus OIL. SGGB, another sugar ETN, but this one's not marked up. And then SGGFF, this is the one I said I'd get to earlier. This is the old SGG. iPath added the double F to the end, a lot of those. And there it is. You can see as wedge type action. I'm not crazy about this downtrend line because it's not super well defined, but you do have the divergence. And again, I already covered the charts of cane, CANE, as well as sugar futures. So one to keep an eye on for a potential bottoming play. SOYB, soybeans took it on the chin, part of the with all the tariffs, that knocked them down quite a bit. But they were oversold, and as I said, just this one's part of the grain ETN, so this one rallied alongside of corn and wheat. And as I mentioned in the last update, we were oversold with a bullish crossover on the PPO. Last time we were oversold before that was right here. You can see that was a good time to step in and buy. Then we were oversold here with divergence, and that led to this big pop. But like those other two grains, I don't have a very strong opinion. In fact, I can see a reaction here. I think the bulk of this oversold pop has played out, and what I see this one doing from here would be my preferred scenario. I'm not going to trade it as such because it's just sort of a wide, loose scenario, and again, something I don't have strong enough convictions in, but I see something like this. Maybe come down here. We're at that zero line. I don't know if we're going to make another low. If we did make a marginal new low like this, that would set up potential bullish divergence. And again, this is one of many scenarios to look out for. I don't know if we're going to go down and make new lows, but if we do, it looks something like this. So you'd have positive divergence on that new low, and we might have a longer term swing trading op. So for now, let's just let the dust settle on this recent oversold rally. UGA, unleaded gasoline. This will track crude oil very well, even though this is gas. This is refined gasoline, but the same kind of chart. Breakdown, back test, another back test, and starting to roll over right now. Based on that, the scope of these divergences, I think there's more downside to come, and I think UGA over time comes down to here to 29.83. If I'm correct, for those of you that drive a lot or own a company where you have fleet vehicles and gas is a big expense, that should be good news. And if I'm wrong, obviously that's not good news for you because gas prices are going higher. UNG, of all the ETNs or the commodity tracking ETNs out there, the natural gas ETNs do the worst job of tracking over time due to the nature of the nat gas futures or whatever, however they're trying to track. I trade nat gas futures if I plan to make a trade on nat gas. But once in a while, if it's a very short-term trade, I'll go into UGAS or DGAS or any of those. But when I look at UNG, you can see a support level which was broken and back tested. So, that was a pretty well-defined trend line. That doesn't look so good. I was recently bullish on nat gas. In fact, let's look at that chart because I forgot to include it in today's update. Okay, here you go. If you recall in the recent videos, pointed out this price channel, we had this little false pop that ran right into resistance there, came back down, but we kept the divergences intact, bullish divergences across the board on all the indicators at that low, went on to go ahead and break out. I think that was pointed out at the time. Hit that first target, broke out, back tested it several times, went on to hit the second target and that third target. And so far we've reversed, and that might be it for the run. There was negative divergence. I think I had pointed that out. I don't know where the lines are. Sometimes on this charting platform, if you don't upload the template, it won't change the save any changes to trend lines, but I think I had pointed that out, that negative divergence right there, and that's starting to play out. So I think it's safe to say that all or the bulk of that rally on the breakout there has already, the profits have been made, and it's probably we could continue lower. Near term, based on that negative divergence, probably more downside, but I wouldn't short it at this point if you didn't already short it there. USO, I covered crude futures today. They hit my uppermost bounce target pretty much the penny and have since reversed. And I shared this chart on the front page today, or in that video earlier. There's that primary uptrend line, a little breakdown there. We jumped back in there, put in a bigger divergent high, and then I pointed out this morning this minor uptrend line. That was before the market opened. You can see that we broke down today. We're down about 1.5% on USO. And that is a breakdown of that minor trend line. So my swing targets, next targets, forget this one here at 1392. Let me remove that and give you a little cleaner shot here. I think right here about 1352, and then ultimately this is my favorite swing target at this point in time, about 1301. If and when we get there, I think we probably get a meaningful reaction off. So if you're swing trading crude, you'll have some hiccups along the way more than likely, if I'm correct, but we're probably going to go down to here at about 13, and that's where you may want to cover. Again, it all depends on how the charts look at the time. What I mean by that, how the intraday charts look, how the daily charts look, how the charts of crude futures look. Do they confirm a bounce or not? So that's the first area I'd really be interested in, maybe reversing to go long for a counter trend trade on the long side. Here's WEAT, the wheat ETN. Again, in recent videos, same story on wheat, corn, and soybeans. They were oversold, or this one was close to it, with the bullish crossover. And I think at the time, if I'm not mistaken, I pointed out this one was at support. 612 is a pretty key support level. It was support here. It was resistance here. It was support here. So that one was oversold or close to it at support, and we got a nice bounce trade out of it. Now, if you're in it or if you took it, I would personally take profits. Here's a lot of reactions at this level. Doesn't mean we can't break above it. It just means we got pretty stretched to get there. So I do one of two things: either book profits, maybe buy it back on a dip to support and wait for a breakout above that level, or trail a stop up. Sometimes I'm telling you, these commodities can run when they want to run. And if this one is in one of those powerful rally modes, it can just break right on through here. So that's option two, is to set a trailing stop or a stop somewhere below there and let it ride. Or again, take your profits. Sometimes the reversals happen in the overnight session and it could gap down. But as of now, this is an old third target zone, and I still think that makes sense. And ultimately, looking at a potential longer term bottoming play in these. I'd like to get in these as a trend trade where we tuck some of these away for many months on end, possibly even a couple years, depending on your trading style. Don't have enough evidence in the charts yet. So right now, just following up, we had a potential bounce trade op there, which the bulk of that's probably been played out for the near term. At least the risk reward is no longer favorable for staying long or going long right here. Here's wood, the other timber ETN. You can again go back long term. There's that primary uptrend line off the 2016 lows. So this chart longer term is bearish. You can see a very well defined trend, breakdown, back test, and this one's moving lower. Trend indicators are bearish, but we are oversold for the first time in a while. So flipping back to that daily chart, there is some potential divergence here. You can see the PPO is starting to curl up. Potential divergence. So we may get a counter trend rally, a pop, maybe another back test of that trend line from below. But if it fails, sometimes these bullish divergences don't pan out. Again, you look longer term. The longer term and intermediate term outlook right now is bearish after that breakdown. So I think if you're willing to ride out any counter trend rallies or maybe jump in short on a back test of this trend line, if we get all the way up there, which we may or may not do, I think this one continues on down here eventually to about 63.26. And that is it. We're right about the 30-minute mark, but 30-minute mark. And remember, when you watch these videos, you can always drop down on the little settings icon on the bottom right and increase the playback speed to 1.25, 1.5 times, and cut through these a little bit faster. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.